Hi, I'm Robert. I'm a CPA here in Key West, and today I want to talk to you about the balance sheet. The company that we're using is Homer's Charter Fishing. And whenever you're looking at the balance sheet, the first thing that you want to look at are the assets. So what is an asset? An asset is an item the company has that has an economic benefit, usually a future economic benefit. Examples of assets are cash, inventory, investments, equipment, boats, buildings, and other items that you have that have an economic benefit to them. The way you list the assets on the balance sheet are you first start with current assets. Current assets, which I have here, these three are current assets. These are assets that are going to be turned into cash or they're already cash within a year. Then you have non-current assets. These are assets like a long-term investment that take over a year to turn into cash. And then there's a special kind of non-current asset called a fixed asset that usually is never turned into cash. Okay? So we have our current assets here. We have checking of $20,000, savings of $5,000, and inventory of $2,000. We have a long-term investment that we're not going to cash out of until after a year. That's at $50,000. And then we have a boat that's $100,000. So we need to add all of this up. And that is $177,000. Now the reason that this is called the balance sheet is because of this line right here. Everything on this side of that line must equal everything on this side of the line. So now that we have our assets in order, we now need to determine who are the true owners of these assets. So we're going to look at each asset one by one. Our checking account is our operational account. So that's obviously owner's equity. The savings account here, this is money that we borrowed. So that is owned by our creditors. And then we have inventory here, $2,000. The inventory was purchased on credit, as inventory usually is, so that's $2,000. Then we have this long-term investment. This is taken from operational funds, so that is owner's equity. And then lastly, we have our fixed asset, our boat, which is $100,000. When the company purchased it, the owners put in $30,000, so they own $30,000 of the boat. And then they borrowed the additional $70,000. So if you add all of these up, you should come to the exact amount of $177,000. And doing the math, we do come to exactly $177,000. So thanks for visiting us here. Make sure to like and subscribe to our page. Thanks and have a good day.